There we go. I think we're live now. I think I figured it out. Welcome aboard, everyone. All right. Yeah, this is interesting. Just make sure we're good here. I think we are. Okay, awesome. Welcome. It worked. Thanks, Alex. Appreciate it. All right, welcome, everyone. So I'm going to try this where we kind of just go through a lot of different topics in a live stream together here. And it's going to be fun. We've got a lot to cover today, obviously, including some of the tariff drama. We'll talk about the updates on the Atlantic story, which is mostly just political drama, which drives me nuts. Then you've got the... some updates on Russia, Ukraine, as well as NATO chatting about the Russia-Ukraine updates right now. You've got tariffs as well as the Atlanta Fed GDP numbers, which the gold-adjusted numbers are a little bit better, but we'll have to touch on those in a little bit of detail. Also, I'd like to hit on some of the numbers that came out this morning, kind of what they indicate in terms of durables versus orders, because there's some nuance there that's worth talking about. Then some more updates on Microsoft and CoreWeave, which I think is interesting. Then we'll get into some of the other topics as well as a few things on, let's say, Greenland or now nuclear energy spaks coming our way, which I think is quite interesting. Anyway, let's go jump into all of that, and we'll do these all sort of one at a time here. All right. So the first one that I want to touch on is the Atlantic story. So this one's entertaining. Okay. The Atlantic story has more updates. Now all of a sudden we're getting reports that there were actually potentially sensitive military details provided, but now of course people are debating what is the definition of a sensitive military update. I mean, it probably would have to require times and the type of weapons being used, but probably also names and locations. How about exact addresses? And so now there's this huge political debate over how much detail is considered a war plan. And so there are arguments on both sides over this, but in case you haven't gotten caught up with the whole situation, here's the TLDR. An Atlantic reporter was invited to a Signal group chat with the Department of Defense and the staff of the State Department, J.D. Vance and others. And basically, here's probably the worst of it, which provides exactly that the mission is a go, what time F-18s are going to take off for their first strike package, what time they're, who's basically getting targeted. Now, they don't exactly say. We know this is a Houthi group, right? Because the whole conversation is Houthis. So we know a Houthi terrorist is being targeted at his known location and should be on, the target should be on time. In other words, the package delivery from the United States, the rockets, the bombs. Apparently the individual was was meeting his girlfriend at a known location, and whether they had CIA intelligence officers or whomever determined that the individual was there, the launch had been confirmed. And there was about a 45-minute window between when the expectation was that the strike would take place and sort of this chat about it. More F-18 launches and then drone strikes and bombings. Basically an exact roadmap as to when everything would occur. And so now a lot of the Trump administration staff who were arguing that, hey, we didn't provide any war plans, have a little bit of egg on their face because this does seem like a war plan. Now, in fairness, the other side, the more Trump-aligned side says, well, I mean, there's an actual address given, and, hey, Signal's not that bad. Maybe there's just no better software. To this, I think we can just be reasonable adults and look at this and say, politicians are always going to lie to us. And I hate that about politics. In fact, I tweeted the following. I tweeted, truth and integrity don't seem to exist in politics. It seems you have to be a paid liar, directly or by omission, to be a politician. And this is true on both sides, right? Democrats and Republicans. I mean, I could tell you all about the lies of our Gavin Newsom, just like, maybe you can say, provide lies about Obama or Trump or Biden or whomever you want, right? It's a nasty, nasty game. So somebody left me a comment on X the other day because I wrote, wow, I didn't have Trump pumping a meme coin on my bingo card today, because he was pumping his Trump token. And somebody replied, well, did you have, the Biden crime family on your bingo card? And I'm like, it is possible I just suck at politics bingo. So, I think we can all kind of agree it's just a crappy, world that we're in when it comes to politics, because you kind of if you don't take a side, you piss off both sides usually. I like to reject that argument, and I always like to stay in the middle, but you've got Levitt, for example. She, by the way, is perfect for Trump. She is the perfect pitch woman for Trump, because she's like, the Atlantic has conceded. These were not war plans. This entire story is just another hoax written by a Trump hater who is well known for his sensationalist spin. And then you get people like Mike Walls in the chat, obviously involved deeply here with the government, government official. No locations, no sources and methods, no war plans. Foreign partners had already been notified that the strikes were imminent. Bottom line, the president is protecting America and our interests. Well, to some extent, this is a bit of a logical fallacy, first of all. And keep in mind, he tweeted this before the Atlantic's like, really? No war plans? Here are the war plans. But anyway, it's a logical fallacy to go, bottom line, Trump is protecting our America and our interests. Well, duh, that's the president's job. But that has no bearing on, did y'all make a mistake? Because if y'all made a mistake, just own it. Just be like, hey, you know what? We've decided to use, a secured, advanced protection Google chat system instead of Signal so we can properly document our messages. It's not that hard. Pick one of the SaaS companies that's all American and promote one of them as opposed to Signal with disappearing messages. And then just, suck it up. Hey, we effed up. It ain't going to happen again. You know what? We took the opportunity to grant a contract to an American company and spend on even more transparent data because we value transparency. We admit we made a mistake. We're moving on. That's all you'd have to say. But this idea of, no locations, no sources, no methods, no war plans. Okay, well, sure. You didn't give a specific location. We know it's Yemen because you're in the Houthi group. No sources and methods. All right, well, drones and F-18s are sources and methods, so that's false. No war plans. Times combined with drones and a first strike package and second strike package sound like war plans. So, I call this one 67% bullshit. Okay? But again, that's just politicians. They all do it. And I didn't have this opinion when I ran for governor of California in 2021. I had this mindset that we could bring, just live stream every single day and bring as much truth and transparency as you can to politics. That was my thought. But I almost think that just everybody who's involved in politics just gets corrupted. You get corrupted into a liar because transparency doesn't get rewarded. Because if you're transparent, you're just going to get sued or you're going to lose the next election, right? It's crazy. But then you also get more of these updates. Here's one. Wall says, hey, JD Vance, the building we targeted collapsed. Multiple positive IDs. Amazing job. JD Vance is like, what? Michael Walls. Sorry, typing too fast. The first target, their top missile guy. We had positive ID of him walking into his girlfriend's building, and now it's collapsed. Well, so is the NASDAQ 100 right now. But anyway, JD Vance, excellent. This is also kind of like a very bizarre conversation to be reading, but it's sort of like the nature of war, because it's like, hey, y'all just literally collapsed maybe an apartment building or whatever it was. I suppose it could just be, when they say building, it doesn't appear to be a house. But anyway, excellent just seems to be, kind of a brash response, but again, this is probably the nature of war. And so, then you've got Tulsi Gabbard arguing, well, okay, basically, maybe certain things were said that shouldn't have been said, but when it's up to the Secretary of Defense to classify or declassify. And I'm like, okay, all right. So, this stuff just drives me nuts because this is just on steroids showing us how, frankly, no matter what kind of politician you are, just the nature of being a politician makes you dishonest, it seems like, because you have to be for your base. And it's interesting because, you see this a lot with Elon Musk. I call him Mr. First Reaction now. I love him from an engineer and vision for the future point of view, Tesla, SpaceX, Neuralink. I I think these are some of the coolest things of our time. You know, it's like the Albert Einstein of our days. But, you know, this involvement into politics has really turned him into kind of a slanderer of his competitors and a hater. I mean, look at this. Now, extremely important difference. XAI and his White Castle. Ironic he chose sort of a White Castle, but maximally truth-seeking AI. And then Google OpenAI, and, you know, the others, Meta, Oracle, what, he's bagged on all of them. Trained to lie and be politically correct. Which is interesting because, you know, when you used to ask Grok who was the biggest information spreader in the world, Grok would reply it was Elon Musk. Well, now it doesn't reply that way anymore. And somebody called out the Grok staff for this at XAI, and they called him out. Constantly calling Sam a swindler, but then making sure your own AI does under no circumstances call Elon Musk a swindler, and explicitly telling it to disregard sources that do so is so effing funny, I can't. XAI, rather than disputing that they no longer allow Grok to call Elon Musk a misinformation spreader, replies with, "You are over-indexing on an employee pushing a change to the prompt that they thought would help without asking anyone at the company for confirmation." In other words, sorry, some random staffer at XAI made Grok shit on Elon a little bit less, and it wasn't the staffer's fault. They were just doing their job like the system was designed, and yeah, it just so happens to no longer call Elon a misinformation spreader, which is really, I mean, they basically admitted, and this is a tacit admission that they changed it, you know, that they changed their algo for what's said about Elon. So I decided to ask Grok 3 beta today, does Musk spread disinformation or is he mostly truthful in his posts? Lately, I've heard people call him Mr. First Reaction as he echoes comments that promote his cause or rile up his base, but I'm not sure if I should believe that. And this is Grok's full reply right here, which I thought was really interesting because if you look at Grok's full response here, I highlighted some of the items. Musk's posting habit on X, especially in recent years, shows a pattern. He often reacts quickly to trending topics, amplifies content that aligns with his views or interests, and doesn't always pause to verify details. All right, I totally agree with that, by the way. Totally agree. But what's actually interesting here is listen to this. Okay, I asked, is Musk truthful? And its reply, it's tough to pin down a definitive answer about whether or not Musk spreads disinformation or is mostly truthful in his posts, because it depends on how you define truthful. Oh my God. The Grok AI is now going to help us question, well, what actually is truth? This is like robots taking over the world. Like, no, you know what? You might think they lied, but wait a minute. Which truth are we talking about here? The truth or the truth? Grok literally goes on to this section here. Critics point to moments like his 2023 tweet calling him an anti-Semitic conspiracy theory, the actual truth. He later apologized, sort of. Or his sharing of a fake headline about Trump and Hitler in 2024, which he deleted after he got called out. These suggest a willingness to boost narratives that fit his own worldview, even if they're thin on facts. On the flip side, Musk's fans argue he's just a guy thinking out loud. He's not a news outlet. They say his truth is more about challenging the mainstream narrative than sticking to nitpicky details. This is so interesting because now the Grok AI has been sort of transformed into this like, hey, you know, like, it's not his job to tell you what the truth is. It's not his job to nitpick the details. So, you know, it's not lying. It's just encouraging your own worldview. Okay. So then Grok says, so does he spread disinformation? Yes, sometimes, especially when he's reacting fast or playing to his base. So you still have a little bit of edginess here on Musk. Is he mostly truthful? Depends if you mean true to his own perspective or if you mean factually rigorous. Okay, I've never seen this before. I've never asked somebody for the truth and then had them say, oh, well, you know, the truth actually depends on if you're talking about true to himself or like factually true. Look, if you're like a mature adult with an IQ of at least 70, you should be scratching your head going right now and saying this is loony. Like, this politics is turning the world absolutely loony, and I have no idea where this world is going to go. Sympathetic Chimp says gaslighting robots. Yeah, seriously, that's exactly what this is, and it's scary because it makes you wonder. Like, honestly, I try to use AI very, very little because I think there's going to, this freaking wheel sucks. Hold on, I got these wheels for 18 bucks off Amazon. They won't stay still. Gosh, switch wheels. There we go. Oh, that's so much better. So I try not to use, when I research artificial intelligence, because it forces me still to do the hard work. And to me, it's easier for me to learn and understand when I'm just, when I'm actually doing a lot of the research myself, or really fully formulating my own opinions and then fact checking them, because it sort of connects, I feel like, more synapses in your brain than just sort of reading a summary. And that's why I try to share that in-depth perspective with you, which is hard to do in short-form content or, zingy tweets or whatever. But really, this is, it makes you wonder, where is the world going to go if we can sort of edit the way chatbots function to sort of make you question what even the definition of truth is? Bizarre. So we're going in a very weird direction. So if I had to zingily summarize this, I guess the way I would summarize this is, how would we do this? Probably say something like, Elon Musk's own Grok is now redefining what the truth is. Grok says when it comes to determining whether Elon Musk spreads disinformation or not, quote, it depends if you mean true to his perspectives or factually rigorous. Yes, now all of a sudden we're in a world where the definition of true and fact depends on what your political alignment is. I'm not sure what the direction of this is going to be in the long term. So, I mean, I think that's kind of the world we're in right now. And I don't know how I feel about it, but I actually feel pretty conflicted about it. But this gives you a little bit of an update on the Atlantic story. Again, my opinion is sort of like advice. If I could give practical advice, which you could apply for your, in your own world as well. Use Google Chat. Use Google Chat. Use advanced protection. Use security keys. You could even, if you ever text people on iPhone, you could verify people's identity by, like they give you little keys and you can sort of link them. So if there are any changes to somebody's profile, they become unverified. You can put little check marks on your trusted contacts, so to speak. It's very fascinating. And so I do that with, Lauren or employees or otherwise. And the only way you could do that is in person, which is great. So anyway, that's something to consider. But there are practical ways to be more rigorous. And I honestly think the Trump administration could take an opportunity here to strengthen their transparency, but also, their operational security. Because in the Atlantic stories, you multiple times hear them talk about, hey, OPSEC, operational security. And it's so ironic because they're literally talking about operational security while failing at operational security. Now, again, a lot of supporters for Trump are arguing, hey, this is all just fake news anyway, because who cares? Donald Trump is, doing what's best for the country, and, nothing happened. It's not like the reporter sent these messages to the Houthis, in which case he'd be a traitor. I don't know if that's the point. I think if the CEO of JP Morgan and Chase gave me his login to access everyone's bank account in the United States who has a Chase account, and then I logged in and I'm like, oh my gosh, I see everybody's bank accounts in the United States. Does that make Jamie Dimon's failure any less bad? No, it's horribly bad, and he'd probably get fired as CEO. You probably should see some discipline here as well. Under any other administration, I bet you would. But I bet you the CEO of JP Morgan would lose their job if they did that. Now, if somebody's like, oh, well, Kevin would have to have been a criminal to leak the what he saw on those bank accounts. And it's like, okay, but that's a logical fallacy. You're shifting the problem. You're going from, oh, they committed an error. Yeah, well, it doesn't matter because that would only be a problem if another person made a mistake or committed a crime. Yeah, but that doesn't resolve the fact that a massive mistake happened. So, you know, but then again, the nature of politics is people have to put on their political veil and say, oh, well, you know, I benefit from promoting Trump or Musk, so I must continue to do that. And I think this is problematic. You get a lot of this, by the way, and I see a lot of this, especially on X, a lot of people posting things like, oh my gosh, look, you know, buy Tesla is skyrocketing on the Google Trends search results. Yep, well, maybe that's because Trump buys Tesla skyrocketed when he bought a Tesla. So we have to be able to isolate these things. But if you say that, you're unpopular to the Tesla crowd. You know, oh, you know, why you gotta be negative about a positive story? And you don't make a lot of friends with it because the bears are already bears. So that's where social media sort of skews the desire to actually share what actually is the truth. Because in a realistic example here, if the fact is, with certainty, if the certain fact is Tesla search results are skyrocketing because Trump buys Tesla is skyrocketing, if that is the fact, then the claim that, oh, Tesla sales must be skyrocketing because buy Tesla is skyrocketing in the Google search results is false. The claim is factually false if it is true that they're only skyrocketing because of Donald Trump buying a Tesla. Now, then you could make a further claim that because Donald Trump bought a Tesla, search results might continue to be high for buy Tesla because now more people want to join the bandwagon. Okay, but that's a different claim. And so that sort of argumentation is very difficult, I think, for people to process sometimes, who don't want to, you know, put in the effort because it's not part of first reaction. Even using the word argumentation implies argument, like people yelling at each other. But if you ever taken or studied logic, you understand argument is simply, you know, providing a claim and evidence. A well-structured argument is one that follows a logical flow. This is my claim, here's my evidence, here's my conclusion, you know, therefore. That's an argument. Anyway, so that's my take on this Atlantic story, and now it's time to move on to the next story. By the way, we just got a little bit of a Fed update here. Growth does appear to have slowed, surveys point to caution about, ooh, okay, hold on, let me put a little update in here. Let's see what we got here. Somebody here in the chat says, I drove an hour to fish a lake that's still covered with ice. Dig a hole, bro. Just don't fall in. Would it technically consider dig a hole, or would you drill a hole? Or crack a hole? Also sounds like a really bad idea. Don't follow what I just said. All right, let me see this here on, I want to update this in here. Fed, because this update, this little presser just came out. Let's go with, where was Kashkari? Oh yeah, there we go. Okay, so this is Mausoleum, Fed member. Growth does appear to have slowed. Let's see here, blah, 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 that's fine. Wary of assuming all tariff-related price changes will be transitory. Yeah, that's right. Discount Powell, baby. Patience. Okay, yeah, well, that's not really news. That's boring. Boring. Okay, next up. So the next topic we gotta hit on is, so we talked about the Atlantic story. The next topic I want to hit is... let's briefly talk a little bit about Russia-Ukraine. We'll keep this one shorter. Okay. Russia-Ukraine updates. So Donald Trump thinks Vladimir Putin is milking the clock, although we did have a partial ceasefire in the Black Sea, where essentially we agreed to limit hostilities in the Black Sea, as well as limit strikes or agree to talk about limits on strikes against energy infrastructure, in Ukraine and Russia, on both sides essentially. And this is interesting because it is a sign of progress, but there are a lot of folks suggesting that Putin actually benefits substantially from milking the clock, as Trump says. See, Russia right now is demanding to get back into the SWIFT global payment system and no to the U.S. arming of Ukraine. So, in addition to this, what we're seeing is this idea that Russia can essentially leverage their ability to negotiate on behalf of or with the United States with countries like Iran to stabilize the Middle East. So what you're finding is Russia is leveraging whatever they can to say, hey, look, we're willing to be the utmost patient, and we're going to take advantage of the fact that we've got a good relationship with China. We've got a relationship with Iran. They manufacture drones in Russia. Russia, partners with Iran on projects. And that's sensitive to your oil market, Mr. Trump. See, Trump is so transparent about his goals, and Trump knows he's only got 4 years. So Trump is in a position where he kind of has to hurry to keep oil prices down. This is why he wants to clean up, the Suez and the Red Sea to make sure that we have clean shipping supply lanes, so that way we're not creating more inflation than we already are, potentially even contributing to reducing inflation. So Trump's got 4 years to do this: reduce inflation, control oil, ideally lower the cost of oil, and ideally fulfill the campaign promise of coming up with peace between Russia and Ukraine. Russia knows this, though, and Russia is not in a rush. See, Vladimir Putin basically doesn't leave office. When they used to have term limits, they simply put Dmitry Medvedev into office while, Putin controlled the puppet of Medvedev, and then Putin was reelected. There's this argument, though, that Russia's economy is really struggling and that they need to hurry, but that doesn't seem to be the case. See, Russia has kind of shifted to sort of what happened in the United States in World War I or even II, a wartime economy. And I can't believe I'm hearing this from Russia's central bank, but Russia's central bank is now saying that they're in for a soft landing. My God. Slowing growth and not a crash. And because of their military/wartime economy, they have time. And so with this benefit of time, they don't, and at the same time, Donald Trump blowing up on Zelensky in the Oval Office, I think Putin realizes he has a lot more power than people give him credit for. And it's kind of scary because obviously it's Russia, and there's a thesis that, they're a global contender. The country with the second most nuclear weapons is one of the reasons Donald Trump wants Greenland. Mind you, he wants Greenland so badly because Greenland abuts to the trading routes that we see from China and Russia, where they can essentially ship their products across the world through the Arctic Sea. They've got great ice cutters. They've got plenty of tools to essentially transmit, ignoring the United States trade barriers, even oil barriers, through this area. And so this creates an interesting argument where Donald Trump is on the clock. He's got to hurry and fulfill his promise that he said he would end within 24 hours, which, we know didn't happen. But beyond that, now we're in a place where, crap, when are we actually going to see Russia roll? And the question, or the answer to that might be never. Russia doesn't necessarily have to. In fact, they're more likely to hold out for, Ukraine to, how should you put it? They're more likely for Ukraine to kind of wait for Ukraine to be bled dry by limited United States funding for Ukrainian purposes. We've already seen many times this idea that Donald Trump is going to restrict or severely limit shipments. At one point, we froze security intelligence that we were providing, intelligence services that we were providing to Ukraine. At one point, we froze all of our military aid. And some of this has come back in part, but nowhere as much as you've seen under, let's say, the Biden administration. Now, a lot of folks argue, hey, but this is great. This means the United States is finally spending less money on these foreign interests. But it shows you that Trump is actually potentially in a weaker spot here than Putin, which is crazy to say, I know, because the United States is the largest economy in the world, first largest nuclear power, followed by Russia. China's not even anywhere close, but not yet at least. But this idea of Trump buying Greenland is in part because Trump needs more negotiation leverage against Russia. That's my take, at least. So Donald Trump bluntly says we need Greenland for national security purposes. Beijing has tried to invest in mining projects in Greenland, which the Pentagon has blocked 3 Chinese airports from being built in Greenland. You've got the major trade routes that avoid the whole drama in the Suez Canal, mind you. Some people actually go as far as calling it the Polar Silk Road, which is interesting because, especially in the summertime, which is when this is often used, the routes are about 40% faster than shipping, throughout other sea routes. Greenland potentially also has as much as 17.5 billion undiscovered barrels of oil. I mean, you don't discover barrels of oil, you discover oil that then you barrel, but you know what I mean. And 148 trillion cubic feet of natural gas. Obviously a harder climate to conduct exploratory drilling in, but once you do, it apparently is full of abundant natural resources, including rare earths like graphite and others that are plentiful along the coast. And, historically, we've talked about acquiring Greenland since like 1867, but The Economist, who usually hates Donald Trump, actually thinks buying Greenland would be a brilliant idea. So Donald Trump is doubling down on this, while at the same time J.D. Vance is planning to visit with his family at a military base early next week. But when you start putting all these pieces of the puzzle together, you kind of see, Trump's on a time constraint. He's got to fulfill his campaign promise, and he wants Greenland in part to increase his leverage over Russia. But on the other hand, you've got Putin, who is not on a time constraint, military/wartime economy that gives him time. They have way more people than Ukraine has in terms of the ability to draft military service members. So you're in this sort of weird position where Putin probably has the edge over Trump in these negotiations. That's not to say their economy is anywhere near as strong as ours, but which it's not, obviously. I'm not trying to talk down U.S. exceptionalism. I'm just saying this idea that we're just going to, bully Putin into some form of agreement that the United States finds beneficial solely for the United States is probably not going to happen. Probably going to get a whole lot more concessions, which obviously isn't great for Ukraine, but it's something to pay attention to because it definitely suggests the Trump admin could be very open to cozying up to Russia. We literally just heard talk about agricultural imports coming back from Russia, like Russian wheat. So if this happens, soon you could be eating Russian bread again, or bread made with Russian wheat. It's a commodity. Very interesting. Now, I'm all for, war to end and global supply chains. But at the same time as we're like, make everything in the United States and tariff everyone else, but let's import Russian wheat. It's a little interesting, to say the least, right? So if I had to summarize a little bit of what's going on here, I would probably say it like this. Donald Trump wants Greenland. Why? Because he wants the polar shipping routes and leverage over Russia. Right now, Donald Trump has lost a lot of leverage over Russia because Russia, according to their central bank, is in for a soft landing and can ride the wave of a military economy. Think World War I, World War II, United States, where everybody's just in military mode. And the economy is actually not falling off a cliff. It's not great, but it's stable over there, which gives Russian the luxury of time. And which gives Putin the luxury of time, which Donald Trump doesn't have. He's only got a 4-year term to get work done. Putin's probably in for life. So I think Putin's got a bit of an edge over Trump, at least in the near term. We'll see what concessions we get from Trump towards Russia. So far, it looks like we're going to be getting Russian wheat again as we start importing Russian wheat in agreements that are starting to be formed with Russia and the Trump administration. We'll see what this all means for Ukraine and others in the future. So, okay, cool. It's sort of like a nice little summary of this whole thing. Okay, cool. So that's Russia, which I thought was an interesting update to talk about. The next one I want to talk about, I mean, we could touch on tariffs now and the Atlanta Fed. That'd probably be useful. So, yeah, let's do that. I'll take a sip here. Yeah. Just trying to, you know, I always think it's funny when people are like, oh, I joined late. What's Kevin talking about? Press rewind. You know what Kevin's talking about? Kevin's talking about the trade alerts and the awesome Meet Kevin membership over at meetkevin.com, where you can get access to all 8 courses, every trade alert, every private live stream, every alpha report, a course member meetups later this year, you name it. Everything. Trump, real estate, you know, the Trumponomics course, the real estate course, the how to get stuff done and be productive, the sales course, the real estate investing course, the stocks and site course, all for a low fee that you could pay on a monthly basis, quarterly or annually if you want. Pretty inexpensive, as low as $1.63 a day. This price won't last. The price will go up on this, so buckle up for that. And when that price goes up, if you've already signed up for one of these subscriptions, you will preserve your price. So your price won't go up. Only new signups will have a more expensive price. So consider that when you're looking at the Meet Kevin membership. We will have this price go up soon. So hop in before it does, and then you'll be able to lock in your price. All right. So let's get to the next topic of tariffs. Tariffs. And the Atlanta Fed. All right. All right, here we go. All right. Tariff drama is back in focus today with the NASDAQ selling off, but honestly, no matter when you watch these videos, the market's either going to be up or down. What matters more is what's going on with tariffs, what is the latest update, and what's going on with that Atlanta Fed GDP measure. Because the last GDP measure we got from the Atlanta Fed was in that negative 2.4% range. However, the Atlanta Fed provided a note on LinkedIn, of all places, suggesting that the adjusted Atlanta Fed model was probably closer to 0.4%. But even 0.4% is a substantial write-down from where we had been previously, which was well over 2.5% to even 3% towards the early portion of the year. In fact, you could see that right here. Well, the Atlanta Fed, after the durable data release this morning, came out with a new update. And the current update released today, March 26th, is that GDP is growing at negative 1.8%. However, the Atlanta Fed is now providing a gold-adjusted GDP now report, and they provide why they are providing all of these updates. If you really care to read all their formulas and all this junk over here, they had a really good LinkedIn summary of this, but basically, when they remove, gold and sort of adjust for these rapid changes in gold imports and exports that are going on, you actually get a GDP now forecast, which probably more closely aligns with actual GDP, of around 0.2%. Well, I don't know about you, but if our GDP is only growing at 0.2%, that's pretty damn miserable. That is very low. And I'll tell you why it's very bad. In 2007, we were told that GDP was growing at 0.7%. Everything was fine. But what ended up happening is about a year later, they revised GDP down over 1 percentage point, and you actually had negative GDP, and oh my gosh, you were actually in a recession the whole time. So this makes it possible that we already are in a recession. We just don't recognize it yet. Now you have people like Kathy Wood say it's just a rolling recession, but this GDP estimate, even gold adjusted, is a little bit of a slap in the face to some of the uncertainties that are essentially being caused, at least in some part. I'm not saying Trump is entirely responsible, but at least in some part being caused by this Trump tariff uncertainty. We saw that actually in the durable data this morning, and there's some nuance to the data. And so I want to explain some of that data a little bit because it does get complicated, and it's worth just breaking it down. So today was the first day we actually had a bit of a real data hit. So far, we've had hits because of soft data, but now we're actually starting to have some real hard data hits. And how are we seeing it? Well, we're seeing it when you actually look very closely at the data. First, this morning durables data, like durable goods like washing machines and cars, even X cars, that actually beat for the preliminary read for February. So in other words, people still bought more of these goods in February than economists expected. Economists expected, negative 1%. Actually, I think it was a negative 0.1% or 1%. Either way, they expected a negative read, and we ended up getting a positive 0.9% read. So obviously a little bit better on the durables data. Okay, so where's the bad news in this, Kevin? Well, it's capital good orders. See, durables and shipments are things that have already either been paid for or already being bought. Orders are a little interesting because orders are something that could still be canceled, or it could be a sort of a more of a future read. In other words, there's a delay between a capital goods order and a capital goods shipment, for example. Shipments beat, also 0.9 versus 0.2 expected. So you're getting a beat on shipments for February. But what about orders? A little bit more of a leading hard data read. Well, capital good orders missed. They came in at negative 0.3 versus 0.2% expected. So all these numbers can get really confusing, but let's put a little bottom line on that. What's happening is businesses are actually starting to say, you know what? Let's wait. Now, I've warned about this before. I've warned, and it's my unpopular opinion, that companies are going to substantially delay their massive Trump knee-bending capital expenditures because they can be truthful and say they're going to invest all this money over the next 4 years, but then they could also be a little sly about that or slick about it and say, and we'll start that project in 2 years when we're in the deep, dark recession and it's cheaper for us to build that factory then. Or we don't build the factory at all and we U-turn on it without committing to anything up front other than, getting the pleasure of Donald Trump exempting you from tariffs because you're like, $500 billion coming your way, master. And then when the circumstances change, you're like, just kidding. We're in a recession. We ain't doing that. In which case, Donald Trump would have way less leverage to punish you back anyway, because the economy would be weaker and he sort of needs you anyway. But I mean, really, if you think about it, sum you up on my unpopular opinion video that I made, why would you build a factory in the United States only to return to free trade at some point in the future, and then all of a sudden you were absolutely uncompetitive? You were probably the most uncompetitive factory that you could have possibly built. You really need government grants to make you competitive again. Otherwise, it won't be a sustainable U.S. worker job. It'll temporarily be sustainable, but then guess what happens? You end up going, like that company goes bankrupt, or that factory or facility or whatever it is gets shut down because you just end up outsourcing back to a globalist economy again. That was my opinion. But then I read an Economist piece this morning, and the piece almost reads like I wrote it, which is a problem because I don't want to sound biased in this, but I just want you to see it yourself. So here it is. The Economist, this is a screenshot from it. The chill that extends beyond the manufacturing industry. Okay, so now this is interesting. The chill that extends beyond the manufacturing industry. Okay. David French of the National Retail Foundation or Federation notes his members would like to nail down their sourcing arrangements. Can they rely on production networks that run through Mexico, or factories in Southeast Asia a safer bet? Purchasing managers do not want to make rash moves until the dust settles on the new tariff landscape, whatever it may be, and the uncertainty is delaying other investment decisions as well. Tariffs on building materials and consumer goods add uncertainty to opening new store, Mr. French says. but companies know how to flatter the president. Many of their announcements concerning spending plans were already in train before Donald Trump took office, The Economist here says. Moreover, for every announced deal, others are languishing. Recent surveys from the Federal Reserve branches in New York and Philadelphia registered sharp declines in manufacturers' outlook for the economy over the next year and a half. This is basically where they're saying, while Trump is announcing all of these deals, a lot of them may have already been in the works anyway. We're not talking about all of the deals that are getting canceled. Like, in a moment, we're going to talk about how Microsoft is canceling even more data centers than the first time we heard the story. So now this is really interesting because The Economist is now doubling down on this argument, and they just wrote this piece, but this unpopular opinion that I made a few weeks ago, it's starting to sound very familiar. It's starting to sound like I wrote this. I didn't, I swear. But it sort of makes it seem clear that other companies and economists are seeing the same thing, that, yeah, why would we invest right now? Why don't we just wait? And that could probably reiterate why these tariffs are so damaging. You know, Bloomberg Intelligence actually had a really interesting piece on software this morning, where they suggested that, only a fraction of the federal government's software spending or the federal government software spending only represents a fraction of all software spending in the United States. But when you lump all of the downstream effects together of what the government is responsible for, like one department using software to then allocate funding to universities who then have their own software, you could potentially argue that up to 40% of the app software market is exposed to government cuts, which is really bad for software businesses because now you're talking about negative licensing seats, negative growth on software companies that already have pretty rich valuations. Not great. Donald Trump also talked about auto tariffs coming as soon as today, copper tariffs coming, potentially fewer exceptions now than expected. I mean, Trump is kind of the definition of an actual flip-flopper. You know, one day it's, April 2nd is going to be Liberation Day. We're going to have the largest tariffs we've ever seen. The next day is, there are going to be a lot of exceptions. You know, some countries won't have any tariffs at all, and a lot of companies won't have any tariffs at all. Oh, by the way, look at Hyundai. They're announcing a factory, and yay, they're going to be exempt from tariffs. Good boy, Hyundai. And then today it's, we're actually going to have a lot fewer exceptions than we expected. So guess what that means? Oh, stock market down. Oh, wow. Even just in the time that I've been yapping here, it's falling even more. 1.96% on the Qs. Tesla down, 6.6%. You know, this morning, we were playing with these lines a little bit. On the Alpha report, I suggested if we were to go down at the open, we would go down to 489 in the Alpha report. It's exactly what happened. Now, we broke that line as well, and now we're just off a cliff. We'll have to see where the next stop here is. I didn't think it would be a full 3% to get us down to 479, but boy, now it feels like we're bleeding to that direction. We're down 2%. I don't know. And then on Tesla, I thought, we would end up coming to hit 274 in a down scenario, which we did, and then got rejected by it. As we're getting rejected by it, we ended up losing even the 271 soft line, which puts 260 back in play for Tesla. A little challenging here. But anyway, that's just some of the TA that we talk about in the course member live streams or the Alpha report, which remember you can get those over at meekheaven.com. So now all of a sudden you're seeing some of the hard data start to roll over. Remember, a lot of this is still February data. The fact that we're seeing orders weakening in the face of more of these uncertainties is problematic. Now, The Economist suggests we only have about a 25% risk of recession, that we're not in a recession right now. Again, people dispute whether or not we're in a recession right now or not. But it's really clear that growth is slowing. You've even got Fed member from, I think it's the St. Louis Fed, St. Louis, isn't that? Yeah, no, St. Louis. They were St. Louis. Growth does appear to have slowed, probably because businesses and people are worried about, the tariff impact. And Kashgari reiterated that this morning as well. So a lot of Fed speak, this talk about tariffs are a threat that grows the longer it affects confidence. So in other words, if we just U-turned on all tariffs right now, maybe we could go back up. But if we keep doing this, no tariffs, lots of tariffs, the most tariffs ever, fewer tariffs, more tariffs. Well, all you're really doing is just destroying GDP growth because everybody's like, let's just wait. People aren't going to buy machinery. I mean, like, if I was a business owner right now thinking, okay, I'm gonna sit here and let's say I'm a kitchen carpenter, okay, because that's what my father was, and a kitchen designer, and I need to decide, do I want to buy a new CNC for my warehouse? You know, I probably wouldn't make that purchasing decision right now. Say, well, I'll decide in 6 months, and I could still take the tax deduction this year. As long as I do it before December 31st. Why would I make that decision in March? I'll just wait. That doesn't mean you're bearish on your business. It just means you're like, we'll just make do for a little while longer. But if everybody starts doing that, that's why you get the Atlanta Fed GDP so negative and how dangerous it is, how rapidly you could really screw up the economy. Now, of course, the Trump administration suggests that this is just a detox period. Fine. But I'll tell you, if we go into a deep, dirty recession, you're going to have... Detox is going to feel like a depression because so many people will lose their jobs. So far, though, no big layoffs yet. Hopefully that keeps going. Maybe that's because corporate balance sheets are so strong. And they are. The biggest companies are the most profitable and most cash-rich compared to any time in history. Which is good because it creates an insulative blanket. The question is, when do we pierce that insulative blanket? And consider that, 45%? Somewhere around 45% of jobs in the United States come from small businesses. Now, Bloomberg suggests that, the sales recession's already been priced into the Russell 2000 small caps. Oh, okay. Now we're going to call it a sales recession, not an actual recession. It's not an actual recession. It's just a sales recession. Whatever. I don't know if I buy that. So I'm a little concerned about that. And so I think it was Barclays this morning that said we're kind of like in a Rorschach economy right now, where if you hold up, a Rorschach test, like the ink blots, they hold it up and they're like, what do you see? One person's like, I see a dog. One person's like, I see a house and $1 million of cash. People are like, all right, well, I thought we were on animals, but I guess we're talking about something totally different. So Barclays says this because there's so much data for both bulls and bears. This morning in the Alpha report, I actually called this market the checkerboard market, where it's sort of like there's so much white and black, or red and white, or whatever colors you want to use. It's sort of like, there's data all over the freaking place yet. You just don't have a clear board. So we don't know. We don't know who's winning right now. Myself, though, I'll give you an update on the bull-bear scale. Technically, by the way, that is the bear-bull scale. And so the bear-bull scale right now, for me, sits at about 2.9. Now, you have to be careful because there are people that just don't understand nuance in the comments. And they're like, oh, one day Kevin's bullish, one day Kevin's bearish. That's not true. It's not a light switch. And I try to be, like, the reason I created the bear-bull scale and I try to be so transparent with everything that I'm responding to is because there's so much nuance involved. I've been sitting 2.5 for quite a while now, probably a couple months here. Since probably about mid-Feb. I turned under 5, so bearish back, in June of last year. It was more like July of last year, mid-July of last year. We went under 5, so went more bearish. And then we've been bouncing around this sort of like 2.5 to 4.5% number range based on data. So last week I'm 2.5. Then we get really good data on Monday. We actually did get good data on Monday and a softening of the tariffs that we heard about on Friday. And I'm like, okay, maybe we're 3.2. Then we get some mixed data again this morning. I'm like, we are still bobbing around that 3 level, but I'm sitting around a 2.9. Right? So I'm kind of taking this data and sort of adjusting where I am. And all the data I look at just keeps pushing me closer and closer to the bear side. 2.9 is pretty bearish. It's not like sell everything bearish, but I don't like the Atlanta Fed sitting close to 0 because that's just going to get revised negative, just like what happened historically. I don't think this time is different. I like looking at history. And in prior recessions, we usually revise down into a recession. So that's why I lean more on the bearish side, and I can't wait to be Mr. Buy the Dip again. But the thing is, I feel like I always lose because as soon as I turn bearish or as soon as I turn bullish again, everybody's gonna be so jaded about stocks. Like, I think it was the Barclays this morning. They're like, oh, you know, stocks sold off, so now they're reasonably valued. And I'm like, 5% off all-time highs now makes them reasonably valued? Okay, let's agree to disagree for a moment that they're reasonably valued. How about this? I don't want to buy reasonably valued stocks. I want to buy undervalued stocks. I want to buy the cheapest, dirtiest stocks that you could buy at a massive discount. I want Restoration Hardware all over my face. Ugh, I want Restoration Hardware. Why? Because I actually think it's going to fall even more. But they're trading for like a half peg right now. We did a full analysis on them, and I'm going to keep analyzing them. They're getting price cut like crazy by Wall Street analysts. Like, Guggenheim cuts the price target. Great. The more these analysts cut the price targets, the happier I am. I cannot wait to buy Restoration Hardware stock at a discount. It already is at a huge discount, but I want even more. I want a bloody discount. That's what I want. It's kind of like what we do with House Hack. I want deals that are so nasty that nobody wants to buy them. And then we can get really fat wedges on them. Look at this. $171,000 of wedge value we made. Didn't pay a dime of taxes on it because we bought a house for $507,000 that's worth about $760 right now. And it looked like nasty. Who's going to live in that? No soul is going to live in this. It's disgusting. It's like rot and feces and nasty. It's disgusting. You know, and the House Hack comes along and makes it beautiful again. And just remodels and renovates everything. So we get paid money for that. And the more people invest in our 5% bond, which we just doubled the people investing in our bond over the last week, which is crazy. I think people are diversifying from the stock market. You can be a non-accredited investor now too. You get a 5% yield. You get upside. If our valuation goes up, you get 100% of the upside. You get 5% per year, and we buy, fix, build, and manage the real estate for you. And we do it in a transparent manner. All of the properties are listed. Like, that's our building. That's our house. Like, these are our properties. You can see them all over at househack.com. It's kind of cool. So I encourage you to check that out, househack.com. At least think about it. Like, people ask me, like, Kevin, well, you know, what's the deadline to invest? We're not trying to pressure anybody to invest right now. If it's good for you as a diversifier, do it. You know, that's your personal decision. Read all the information about it, the circulars and pre-PMs or whatever. But we see it as the sooner you invest, the sooner you A, diversify, and B, get a 5% yield, which is kind of cool because you get both. The upside of private equity stock, downside protection, and the yield. I think it's awesome. So, okay. So this gives me, this is sort of a bit of my thought on what's going on with tariffs and the economy and the bull-bear scale. I'm just not ready to get in there and say, oh, I want to buy everything. See, Barclays wrote, making sense of it all. U.S. equity markets are more reasonably valued after the pullback. Well, honestly, like, part of that is redundant, like, no duh. If something's at $100 and then it drops to $95, congratulations, Sherlock. It's more reasonably valued. Like, you didn't really tell us anything. So I feel like even Wall Street people are really, really confused. And I think that's why you're getting some of the risk shaving that we've seen, where you get this environment of, okay, we got a bit of a bounce again. Let's use that as an opportunity to take some risk off the table again. And and this is a feature of recessions, recessionary environments, where you get these really volatile, oh, the worst is over, the correction's over, you know, buy the dip, and it all comes up. But then people are like, cool, that was fun, take my money now. So we'll see. But that's my take on tariffs, the Fed, and the economy this morning. Hopefully that's useful to you. All right, now another topic we've got to hit. Let's see. We talked about the Atlantic. We talked about Russia, Ukraine. We talked about tariffs. We need to talk. We talked about Greenland. We talked about the durables data. We've done a lot. Software a little bit. Microsoft a little bit. Yeah. Okay. Doge. So let's do a smidge of a Doge update. Doge dividend. Okay, let's see here. All right. So, okay, somebody's got a question here. They say, what happens if a house goes wrong? I don't understand how that would be possible. I mean, I suppose anything's possible, but you would have to bet that all of the underlying real estate evaporates, right? Like, this is a very different company than, like, some SPAC or some bullcrap. This is a real estate-backed company. So, like, the underlying assets are there. You know, if you need to sell those, you can. There's no bank debt on these properties. It's kind of incredible. So this idea, you know, the question, I mean, it's reasonable, and anything can fail. There's risk in everything. But real estate to me is a diversifier. It's not like a, you know, a risk play. I actually see real estate as sort of an unrisk play. It's a de-risking play, right? You de-risk from the insanity of the stock market. You de-risk from the craziness of, you know, bubbles like, I don't know, nuclear energy SPACs, which we'll talk about in a moment, or, you know, I don't know, the next AI CoreWeave IPO, which I think is dangerous, but whatever. So, yeah. Akash says, how come bonds are not rallying in this? You mean like treasuries? Well, because of the fear of tariff-induced inflation. See, tariff-induced inflation will occur first, to some extent. Certainly, PPI inflation, right? Producer price index inflation, and to some extent, consumer price inflation. But when you go into a recession, you're going to be facing the biggest deflation we've ever seen before until we print our way out of it and actually create inflation again. So, quite interesting. So yeah, valuation, everything is on the House Hack website. How can you pay a 5% yield from our rental properties that are... Look, dude, we have $60 million of free and clear real estate. We've got like $12 million in bonds that we pay interest on. You know, the properties have more than enough yield to cover all of our expenses and the bond interest. January's EBIT, January, even if you consider interest, is EBIT profitable, and if you take out interest out of that, it's profitable. You know, hopefully we can have the whole quarter be like that. I'm just saying, like, it's pretty good. Hopefully the whole quarter can be like that. Well, we'll see. But good question. All right. What are the biggest risks House Hack face? I don't see, like, people ask me this. Maybe I'm biased. I don't see risks for you know, for House Hack. I mean, unless California like broke off of the earth, or like everything, you know, disappeared and there was no insurance, or it all got abducted or whatever, all the real estate assets, you know, unless that happens, it doesn't matter. If there's a recession, great, we get to go buy the dip with the cash we have. If there's not a recession, cool, we just keep buying wedge deals. That's our POV. So, again, maybe biased. All right, let's get into, what's it called? Yeah, Lenny, maybe you just don't understand real estate. Honestly, you sound like somebody who shouldn't invest, right? If you're like, what? 5% yield on a house? That sounds sketchy. What? Have you heard of rental income from properties bought at a discount? Like, you know, if we're like, you get a 30% yield and you triple your money every year or whatever, you know, or every 2 or 3 years or whatever. Well, yeah, that sounds sketchy. You look at like the EARN ETF. publicly listed EARN ETF, converting from a REIT to a collateralized loan obligation company with a 13% dividend yield. That sounds sketchy to me. That sounds like a 2008 crap show. Me saying, hey, we have $60 million of free and clear real estate. You can see the properties at househack.com, and we pay a bond yield from the rent we receive after expenses. Like, I don't know. It seems like logic is maybe missing upstairs. Maybe you need to sit down and like go take an Econ 101 class or something. But to me, it sounds like the opposite of what you're describing. I don't know. But anyway, it's okay. You know, you just got to open a book and do a little bit of reading and studying and you know, compare what risk actually looks like. But anyway, let's now get into the Doge dividend. Yeah, Kenny, HouseHack's not a REIT, mostly because of the, you know, what HouseHack's corporation. We're not taxed as a REIT because we don't need to be. We have plenty of depreciation, and the upside is that it gives us the flexibility to open up our projects like real estate development and our equity hack plans in the future, wedge lending, TBD on that. That's like a HELOC style, you know, competitor. You don't do that in a REIT. So that what you're investing in isn't like a fund. You're not investing in a trust of properties. You're investing in a real estate company. You're investing in $60 million of real estate and my leadership at the company. That's what you're investing in. And if you don't like that, if you're a Lenny, then you shouldn't invest. All right. So now we're going to talk about the Doge dividend. All right. So what do we have here? Doge dividend. James Fishback, who's been pushing for the Doge dividend of $5,000 to individuals, has given us some updates on his POV with an interview he just did with Newsweek on the Doge dividend. He suggests that in talks with Donald Trump and Elon Musk, both are still open to issuing a Doge dividend. And this time he says that the Doge dividend would actually be different than normal stimulus checks, and that normal stimulus checks were also open to illegal immigrants. Mostly because anybody with a taxpayer identification number, in some cases, were eligible for certain COVID stimulus checks, whereas others weren't. However, the Doge dividend will explicitly exclude any undocumented or illegal immigrants and verify immigration status. James Fishback suggests that legislation is expected to include the Doge dividend, to be determined when. It's unclear as to whether or not the Doge dividend could be included in a budget reconciliation process. It's possible. We saw that during COVID. We expect that Donald Trump's tax plan later this year will be passed through budget reconciliation, which does not require any Democrat votes. And so it can be done. And that's why the law, it takes time to draft the laws and to be reviewed and debated and all the nonsense. But it'll likely get passed through party lines. Unclear if the Doge dividend will be able to fit in there. But what you really need, in my opinion, economically, is you need stimulus in this bill that comes. Whether that's a Doge dividend or more tax cuts, I don't know, but you need something. Because you really got to get growth in the economy again. So, can that come from fiscal spending? Yeah. Could that expand the budget debt and potentially undo the goals that Donald Trump is looking for? Sure. But is the goal to avoid a recession or to go through a nasty detox actual recession where, we triple down on tariffs to tax other countries and increase the burden on the global economy, United States being a massive part of that. So it's going to be really interesting. But I expect towards the end of this year, we're going to get this budget reconciliation tax cut. Whether that includes no taxes on those making under $150,000 to be determined, but it is likely to extend the 2017 tax cuts. It is likely to bring back many capital expenditure immediate depreciation write-offs. Like, for example, in 2022, you could buy a plane and write off 100% of it. Today, I think you can only write off about 50% of it or less. It sort of phases it out over time. The Trump tax cuts might sort of renew that. But it's not just that. It would also be for machinery for businesses or other types of investments that you make. But beyond just sort of continuing those tax cuts to prevent basically a tax hike, we obviously expect no taxes on Social Security, tips, overtime, maybe a SALT tax expansion, and potentially some new tax cuts that could incentivize basically people to spend on the economy. These new tax cuts should be stimulative. The question is, when are they going to hit? See, excuse me, even if we get this Doge dividend that James Fishback is pushing, excuse me, which they're looking for a full $5,000 Doge dividend, which is basically, a proportion of the $2 trillion of savings Doge is trying to achieve, keeping in mind that so far, Doge claims they've saved about $115 billion. Journalists argue that about 40% of their claimed savings are fugazi, maybe even more, because only a fraction of that $115 billion on the Doge websites actually has receipts. They say they're working on providing more receipts, but even the receipts that they do provide are being questioned. So it's unclear. Everything's sort of a work in progress. At least somebody's working on cutting waste, right? Again, how much waste gets cut? TBD. But I think whether or not Doge cuts a full $2 trillion doesn't even matter so much. I think there's actually a likelihood that you could get a Doge dividend check, except they'll just rebrand it like a Doge stimulus check. Because I think we're more likely to go into a recession than not. And that's going to have a lot of people suffering, and I think there'll actually be a bipartisan push for some form of stimulus in 2026, right before the midterm elections. Trump will put his signature on it, and you'll be right back to stimmy checks. And I think you could potentially just create this cycle of inflation and deflation, which isn't great. But I think this time there's a chance it could actually culminate in an actual, full-fledged recession where, 10 million more Americans are unemployed than previously. I hope that doesn't happen. But look at this. Bloomberg Intelligence, we talked about this earlier, but just to remind you, Bloomberg Intelligence has this argument that the federal government cutting as much as they are from software seats could lead to about 40% of all software contracts being cut. Now, this would be your app market. So think about this. 40% of the application software market is exposed to Doge cost cutting. That's Microsoft, Oracle, ADP, Autodesk, ServiceNow, cybersecurity, doesn't matter. All of them could be hit. Excuse me. Technically, the government is only makes up about 5% of our software spend, but all of the other businesses or contractors that rely on the government spending that get cut could make up the other 35% of software multiples that basically get cut, software contracts that get cut. So now instead of, hey, we have, 1 million users for our software and we're growing 20% a year, so next year we have 1.2 million, you might actually be at, oh crap, now we only have 800,000 users, which isn't great for software multiples because you basically put them into a growth recession or likely the whole economy into a real recession. So Bloomberg Intelligence is making this estimate. It's not coming from me. But those downstream effects are just one of the side effects of cuts to spending, in addition to obviously longer wait times on the phone if you're trying to call Social Security. But that needs some modernization anyway. We'll talk about that in just a moment. But, I think it is more likely that Doge stimulus checks come than Doge dividend checks. Because I'm not convinced yet that Doge is going to be able to cut as much as they're claiming. But that's okay because, again, at least somebody's working on it. However, it is also going to lead to some disruptions. See, Intuit, I was reading the Intuit earnings call this morning, and Intuit says that, hey, it's really good that somebody's focusing on the elimination of tax fraud, waste, and overhead costs at the IRS. Totally agree. I don't think any American disagrees with that. And Intuit says they're helping the administration in this, and they don't see any risk to the IRS providing services. Well, good for them, but the Washington Post has a piece where they say the Social Security Administration website has crashed 4 times in 10 days this month because the servers were overloaded, blocking millions of retirees and disabled Americans from logging into their online accounts. In the field, office managers have resorted to answering phones in place of receptionists because so many employees have been pushed out. Amid all this, the agency no longer has a system to monitor customer experience because that office was eliminated as part of the cost-cutting efforts led by Elon Musk. All right. So now you're actually like coring out things that people rely on. Now, it's probably, at least in part, because the goal is to try to make things more efficient. That's the whole point of Doge anyway. Right now, it takes an average of 233 days to review a Social Security claim, which is kind of crazy that it takes that long. But you have a lot of people who work inside of these administrations who were promoted to look for cut costs, cut contracts, offer early retirement, buy people out, consolidate programs, consolidate offices. And that's going to have downstream effects for the economy. But it's also going to piss people off who have to wait on hold even longer. Although probably some of this probably just needs to move all online anyway. Like, for example, you know, if you're going to be in a place where you're relying on phone calls, like the Washington Post is like, oh my gosh, people are waiting on hold. Shouldn't we be in a place where we're able to do whatever we need to do with Social Security over the over the internet rather than over the phone? I mean, I personally think so. It seems pretty straightforward. I don't know. Maybe it's not. But, you know, if you need to talk to a person, certainly email is a tool that is substantially more efficient than phone call. That's my opinion. I think phone calls, unless you're trying to build rapport with a client, I think for transactional things like IRS work or Social Security work, I mean, forgive me, but I don't think you actually need to be on the phone with people. So I do think that there are a lot of opportunities to find efficiency here. But they are going to have some pretty frustrating impacts in the short term for people who rely on these services. And then in the longer term, yeah, I mean, Bloomberg Intelligence could be correct that you could end up crashing even some portions of the software market that's been relying on these growth rates that are in part led by the government wasting money on even sometimes unused subscriptions. And so as a result of, you know, the Atlanta Fed real GDP now gold adjusted estimate sitting at just 0.2%, which is likely going to revise us into a recession if this continues, I personally think a Doge stimulus is more likely than a Doge dividend. But it is interesting to see that you've got James Fishback pushing with Trump and Musk to get the Doge dividend included in legislation, and that illegal immigrants will not be eligible for it. So it's something interesting to keep in mind. So somebody here, Russ Moments says, that doesn't sound good for my Salesforce stock. Yeah, it's a good point. I mean, look, I don't have anything bad to say. Well, I mean, I have my own personal experiences with Salesforce, but we'll keep that aside. I'm not trying to like single out any particular kind of, you know, CRM or software company or whatever. But yeah, I mean, when you have to keep this in mind, if the economy goes into recession, everybody's going to look for places to cut. Everybody's going to look and go, do we really need that many Adobe Premiere subscriptions? Do we really need that many AutoCAD subscriptions? Do we really need to host all of these Matterport, you know, scans from 10 years ago? Probably not, right? Like all of those little cuts are things that just add up. And then remember, a recession, all a recession technically is negative growth. You just had a cycle of some cost cutting that happened. Like this idea that we should always grow at 2 or 3% and never have a negative year is not realistic in history, right? So I find that very interesting. Okay, cool. So Doug Hoppy says, people are doing business every day borrowing money from the bank at 6% plus. Yeah, even like 7, 8, 9%. Construction projects are like 11, 12%. Giving back 5% is cheaper for house hack and better for you. Bingo. See, now that is a logical comment. Here is a human being that actually has a brain. Wow, house hack is, I mean, if you think about it that way, house hack's basically financing the acquisition of wedge deals at 5%. That's a great deal in this environment. That's a fantastic deal. But it's a win for all sides. So, yeah, that's a great way to put it. I like it. So anyway, this is interesting. So Scott here says, you know, you have to also remember the older folks who have difficulty using the online services. This is true, and unfortunately, you know, what happens when you shrink the government is you basically privatize the aid that older individuals need. So if you're in a care facility, the care facilities are going to have to set up a tech support to help all the seniors send their emails about their Social Security. Okay, but that cost is going to be paid by someone. The care facility has to pay for it. And then guess what? They're going to bill the customers for it. So it's not free, right? These cuts are not free. Somebody has to pay to help older folks who can't use the internet use the internet. Again, it's not free. Somebody's got to pay for it. So, yeah. The equity itself can generate... house hack properties are wedge deals. Their equity in itself can generate much higher yields than 5%. Exactly. Like, you know, you get $1 million worth of wedges, you get a $200,000 wedge. You know, that pays for a lot of 5%. Especially if you cycle that. So I appreciate that. The shares will be converted at 140. That's correct. At exactly 140. You are guaranteed conversion at 140. So, yeah, you know, if the value is higher, right? But it's not going to be a different price. So the point is, if you buy, let's say, $20,000 of bonds, you divide that by 140, you have 14,286, rounded up in your favor, shares that you would be eligible for if the company's value goes up. Otherwise, you get your money back. That's the company's promise. So read the docs on it. It's really, to me, it seems straightforward. But then again, I deal with it every day. So read the docs, and I think it'll fill you in. Okay, good. So this is a little bit on the Doge dividend. Great. Now, the next thing that we need to talk about, yes, Microsoft and terrestrial energy. We're going to pull them up really quick. Oh, really? Okay, hold on one sec. I really want to get this doc for y'all, go through this together. Hopefully you like this live, simple video here where we get to just chat in a casual manner together. Oh my gosh, this is all bull crap. Just no financials. Good Lord. Really? There have to be financials on these people. I want to talk about this SPAC that's going to go public. And it relates to AI here. Terrestrial energy. Prospectus. Come on. Proxy materials. No. Current reports. No. Oh, you losers. No. All right. Doesn't look like I'm going to get it. All right. Fine then. So, yeah. No financials. Fine then. All right. Here we go. So this is going to be on the AI topic. Yesterday I made a video on CoreWeave and how I feel like they're basically getting bailed out from way too many expenses and bills they have coming due by going public and basically dumping the shares from insiders onto unsuspecting retail investors. Now, I'm getting a little choked up over this because I feel like this is the best possible time for CoreWeave to go public in still somewhat a near all-time high market with sort of peak AI hype in the bag with older infrastructure. And unfortunately, I think we're going down going forward. Now, that doesn't mean the stock won't balloon up 50% or whatever, but I think it's a terrible investment for the long term. And now we have more data and updates. Microsoft is now canceling even more data centers, according to TD Cowen via Bloomberg. Microsoft has walked away from new data center projects in the US and Europe, in addition to those that have previously that they've previously talked about, that had been set to consume 2 gigawatts of electricity. That's a lot. So what Microsoft has done is they've altered some of their agreements with companies like OpenAI, their multi-year contracts, and they essentially are allowing OpenAI to use data centers from other providers, which to me is a very large PP warning. See, pricing power would imply that you wouldn't want to let OpenAI escape your business if you had a very profitable business model. But I don't think Microsoft sees data centers as extremely profitable despite having invested over $70 billion, $80 billion in data centers. I think they realize they're throwing a lot of money into assets that they don't really need more of. And for Microsoft to basically unleash OpenAI to use other platforms for data center support, to me suggests a really critical pricing power warning. It suggests that companies like CoreWeave are probably at a position of max PP, and that's about to shrivel and shrink substantially. And so at the same time, you're now having companies that I think realize we might be close to a top, and they're coming out with their SPACs, which to me just should be a huge red flag to you. It sounds like 2021. Terrestrial Energy is now set to go public with an enterprise value of $925 million, blank check acquisition. It's expected to provide about $280 million in cash to Terrestrial, which I'd love to go through their finances. Honestly, I don't need to because I'm confident. I mean, I can't guarantee it, but I'm pretty damn confident their finances are absolute trash, and they need the $80 million just to stay alive. We'll get their S1 eventually, but it's not available at the moment. But let me just give you an example of how they're pitching this energy trade that they think is so critical because of artificial intelligence using so much more energy. Meanwhile, Microsoft, canceling 2 gigawatts of energy. They're pitching terrestrial energy now as the generational trade and unicorn in the space. Friends, Romans, countrymen, 2021 is calling. They have planned reactors using uranium isotopes dissolved in molten salt, which will operate in a lower pressure potential environment and cost less with smaller reactors. And the first project, which isn't even built yet, will be deployed 9 miles west of Texas A&M. And they're going to deploy to fleets in 2030, and we're going to go to the moon with nuclear energy thanks to these molten core, salty isotope reactors. I butchered the last line there, but that's okay because they're telling us, don't worry, 2025 is like 1995 was to the dot-com bubble, so get in now. And they've got this beautiful flashy deck that you could look at, delivering carbon-free thermal and electrical energy. Mind you, nowhere in this crap do they actually talk about their fundamental financials. They give you little summaries. Oh, we've raised $130 million, including government grants. You've probably already burned it all. We're back to the world of total addressable market. The serviceable addressable market is $1.4 trillion. Look, we just want a sliver of it and we can all get rich. We have loan guarantees from the Department of Energy. Trump won't cut any of those. Look, a mock-up. How cool does this look? If you don't look closely, you won't even realize this is just some dumb rendering. Look, we're connected to the power grid. Rendering. We have compelling tailwinds, and this is such garbage. I couldn't touch this with a 10-foot pole. And no finances, mind you. Just little graphics and ideas. This is right back to 2021, where they give you these slide decks of garbage projections. I actually, my real estate startup, I refuse to do projections in our current fundraisers. So I'm like, look, I don't know if we're going to go into a recession or not. All I can promise you is if you invest, you get a 5% yield backed by $60 million of real estate that has no bank debt. And if we're in a recession, we're going to do the best we can. If we're not in a recession, we're going to do the best we can. Either scenario, we're going to buy wedge deals, below market real estate, and we're going to do our best to get great deals for the company. But these slide decks, this is a joke. So it's scary because we're utilizing this sort of peak AI thesis right now to say, oh, AI is going to keep expanding. We're going to need all this energy in the world. Meanwhile, Microsoft is canceling projects, and the chairman of Alibaba tells us, hey, hold up. If the chairman, you know what the chairman of Alibaba told us yesterday? The chairman of Alibaba told us that there's a bubble in data center construction. And I even said yesterday, which in my opinion includes energy then, because if you have a bubble in data center construction, it also includes a bubble in this energy investment and speculation. And he says that he's getting worried that people are building data centers on spec, and there are a number of people and funds coming out to build these data centers, but they don't actually have real customers. Microsoft is literally folding on the business, as we saw with their OpenAI update, because the pricing power is waning, in my opinion. Now, the other thing you have to remember is you have like planned obsolescence in some of these some of this chip infrastructure that's going into the NVIDIA data centers. I mean, Jensen Huang himself I'm channeling my inner Jensen Huang right now. Jensen Huang telling you that Hoppers, you basically couldn't even give away, that they'll be worthless when they come out with their new data center chips, which are 25% more energy efficient and obviously more capable. But then you wonder, wait, so the old chips are going to be worthless and they're going to be more power efficient, so we actually need less power infrastructure. Microsoft's already canceling new data centers. Again, second update on this. And the old chip asset value is now going to plummet. Well, that's not great. Certainly not for a CoreWeave IPO or a terrestrial energy. So call me a dirty bear on this sector, but I think it's overblown and highly risky. I'd rather buy Tesla stock, which I think has its own substantial set of risks ahead that probably don't bode very well for the near term. I'd rather buy Tesla stock than some nuclear energy SPAC or hyped up IPO at a time when their asset value over the next years probably going to fade. And not only that, but I think you might sort of hit sort of that bubbly peak that the Babasi chairman is talking about. So I don't disagree with that. So that's my take. Sage X here says, is this different from Oklo? Yes, terrestrial energy is different from Oklo in that I don't know if they're pitching a different type of technology, but they're a different company. Yeah, I'm sure you already know that. Oklo has been a stock that has exploded on this idea that they're going to do their first small purpose-built reactor in, I think they said 27, but they may have delayed that to 2028. The stock has done exceptionally well, and this is why, in part, terrestrial energy is going public as well. Oklo, mind you, was a SPAC. So I actually think, in fairness, you're right. We have to sort of balance that, like, the stock could go up, but just be careful, because usually what happens is the stocks hype up to $60 on Oklo from 10, and now it's bled down to 26, and my take is probably likely to continue to bleed down. But Oklo has the sort of unique benefit of being associated with Sam Altman, and so a lot of people, are sort of just riding the coattails of Sam Altman here. So, something to pay attention to. Anyway, okay, so, yeah, there we have it. A little bit of an update on what we've got going on with artificial intelligence. I think that Microsoft news is huge, by the way. Microsoft, by the way, their stock has been trimming a little bit on some of this as well. You can see we popped out there for a moment to 465. We really never solidly broke out of that 428 extension line. And now we're sitting at about the 100-day moving average. The 200-day moving average is substantially lower for Microsoft. It would put you around the 317 retracement line. Excuse me. Which wouldn't be great, but something to pay attention to. And the Qs, still suffering a little bit. But a bit of a bounce here off of that 2% low we had there. Yeah, I didn't think we were going to make it to the 3% today. But, wow, it's just been a bleed all day long. Wild, eh? So, what other questions do we have here? So, I see a lot of real estate and construction picking up. That's true. February, March, very common time. The true test is, will it have staying power through the summer and then into Q3? To be honest, probably better to just buy Microsoft or the utility running the facility. Yeah, utility stocks have run up a lot. I actually agree it's probably better to just buy a pricing power company like Microsoft than like a CoreWeave or some nuclear SPAC that you're kind of YOLOing on. I agree with you. I think sort of your Mag 6, 7 are usually able to kind of defend their moat and allocate capital. Maybe not as efficiently as other businesses, but you probably risk-adjusted have a better allocation of capital. Risk-adjusted. Russ Moment says, McDonald's will buy him? Can you buy... and then another question here. Can you buy House Hack with M1 Finance? No, you have to go to househack.com, fill out the paperwork. It's a private investment. As far as McDonald's just keeps going up. McDonald's actually is a very unique recession-resilient stock, more so than Walmart. It's a more pure play recession-resilient stock. And I've been pitching McDonald's for probably about 6 or 7 months now in this recession talk, and it's performed way better than the indices. So I'm actually a big fan of that. Big fan. Kimmel, I didn't know you was. Yeah, for the House Hack non-accredited investment, there is a limit. It's either the net worth limit or the income limit. You can play with the form over at househack.com, click invest, then press non-accredited, and you can play with the form and see what it shows you. So it gives you a little bit of insight on that. And then always remember, if you have emails about House Hack, you can always email us at ir@househack.com. So, yeah. And then Russ Moment says McDonald's is a solid real estate company. Also true. So that's what I got for us today. So I hope you enjoyed that. I think this was a decent stream here. We covered a lot. It's, let's see, 11:30. Yeah, this was about an hour and a half long, so kind of cool. I think we covered a lot of topics, and hopefully they were useful and helpful to you. Always remember, check out the Meet Kevin membership over at meetkevin.com. Check out House Hack as a potential investment for you over at House Hack. See if it fits into your profile for diversification, risk, upside, everything. Check it out. And we'll see you in the next one. Let me know if you like this Meet Kevin report. Leave a comment down below after the